Good afternoon, everyone. My name is Bonifasius Seno Aji, NIM 29124392. For my economic and business landscape mid-exam today, I will be diving into how strategic pricing and market penetration for EV charging business can accelerate growth and adoption in the EV, electric vehicle, charging industry, area that's been rapidly shaping the future of transportation as we know. Uh, First of all, I will bring you to the background why this topic is something that needs to be taken account for. The first one is due to global urge to reduce CO2 emissions. Um, we can see here, this is just an example of how total emissions in the of just only due to transport sector is moving in the EU. So first, we can see that there's some change. There was an increase in the total emission, and then there was a sudden drop. This is as we all know, this is due to COVID, and then there was a rise again, nearly going back up, such it was happening before the COVID. But the governments are currently urging people to start having a greener vehicles. That's why we can see a projected downward slope of the total emissions by 2040. And then also supporting this is government policy subsidies, which are accelerating the adoption in the form of financial incentive. Some countries have given subsidies for car manufacturer, either car manufacturer or even the buyers, and some have even given low interest for low-end consumers. We can see this also happening in Indonesia. And then the regulatory framework, where governments have set emission standards, production mandates for manufacturers, and also fuel economy standards to manufacturers who produce these cars, with usually still in the internal combustion engine context. And then infrastructure development, governments supporting or giving investment in charging stations, either for private or public companies, and then also partnership with private sectors for manufacturing these charging stations. Sorry, for the electric vehicle. And then some governments also have given large R&D supports for funding, specifically like China, who are funding for innovation in the EV battery, which helps reduce the something that we can later see that it's called a range anxiety. So people have more trust in their batteries or the power source of the EV. And then also the third one, the background of every EV revolution is the market data, which shows an EV sales growth by 25% worldwide. In 2024, it was 17.6 million EV sales, and then 2025 it is projected to have around 22 million EV sales. This summer could get even higher. So all these shows that rapid expansion of the shows fundamental changing of the automotive industry from previously ICE, internal combustion engine, to electric vehicle. Now, the second background or the market context is the infrastructure gap. So, as we know, the one of the most consumer barriers from people adopting EV is they are the range anxiety that I previously mentioned, which is where users are usually afraid of being stranded in the middle of the road without charging options. Um, so there is some study also been done in Germany, where it shows a comparison data between 2011 and 2020, there are some this graph shows social acceptance of the EV, and we can see there it gets minimized as the year goes on. People are not too skeptic on EV, but as we can see, the the point of poorly developed charging infrastructure is something that is still has the highest point of social acceptance, the lowest, or we can say, yeah, the most skeptical one. That's why we can say that infrastructure gap or infrastructure, yeah, the skepticism on infrastructure is still big even after 9 years of the EV development. And then we also have what's called as charging deserts in rural areas. So we can, not even rural areas, some countries within countries have still places that don't have charging stations at all, whereas in the town side they have many charging stations. So this shows the gap in charging infrastructure of the EV. And then also that most charging stations are still level 2, cre creating a queue in when people are going to charge. What is a level 2 charging station? So these charging stations are separated into three categories: level 1, level 2, level 3. Basically, it's just this, it's the speed, how fast they can charge a car from the voltage available, and if whether they use AC, alternative current, or direct current to power those charging stations. And most of what we know are still level 2, so it's not as fast with what modern technology is available at. We will see why this is the reason in the next slides. And then it is also studied that by 2040 millions of chargers is needed due to the higher increase of electric vehicle, as we could see previously. So infrastructure gap is characterized by insufficient, uneven, unreliable grid support, and the limitations of those charging levels. So this shapes how the EV charging business would set their prices and how they would expand. So for the challenge of the EV charging business is, first of all, the higher installation operational cost. So as we know previously, why many level 2, there are still mainly level 2 charging stations, because even when we see the data, by 2011, a charging station level 2 costs around 17,000, and now the latest data, 2024, 30 years later, cost 10,000 US dollars. So a slight decrease in price after so many years of development. So it's still quite high. And then low utilization rates due to fragmented deployment, reliability problems, and limited EV adoptions during early stages. We can say this is not the early stage, but yes, still there we can see low utilization rates. And then there are still grid and regulatory limits from either the government or the upstream power grid, usually during peak hours. And then this would need for a flexible smart pricing, which would usually create high soft cost. So yeah, as we can see, when setting price for EV, it's not only for the procurement of the hardware, the infrastructure, but there will also be costs for requirements and soft costs, which usually have to do with the regulations and the standards we need to keep up for this kind of new kind of technology adoption. That's why pricing strategy would become a key for these challenges. So I will go into the pricing theories. First of all, we have what's called as cost plus pricing and value-based pricing and competitive pricing. So the cost plus pricing is a fixed markup of total the capital and operational expenditure to determine price, while value-based sets price based on customers' perceived value. So there's this economy and psychological value, usually qualitative data, and then competitive pricing, which is pricing based on the market or the rival by benchmarking. We will not go into the formula, but how focused are these? So the cost plus pricing would focus on internal cost recovery and minimum profitability, because yeah, they are pressing the prices, the cost of usually capital for early business. And then value-based pricing would try to give the customer willingness to pay and perceive benefits, so usually premium or luxury features. And then competitive pricing, which is how the business would position by real time, responding to their competitors or rivals in the same industry. And then also for the literature review, there is how EV charging pricing models. So there are some categories or some types of pricing model. First of all is the pay-per-use pricing, where customers pay only for the amount of product or service they actually consume. So then there's duration-based time pricing, determines the cost based on the length of time it's used for provided. Subscription pricing, which usually offers EV users unlimited or fixed rate charging as other businesses. And then there's hybrid pricing, which combines energy-based and duration-based. But there are also some other hybrid pricing which we will take into account later. And then time of use pricing. This is the most dynamic one, which the rates will depend on the time of day. So during peak hours or off peak hours, the price would be higher during off peak hours. During peak hours, and during where it's not too dense on the grid, they will lower the price. So, and then there's also the market penetration strategy, which is focus on according to Kotler and Keller, is a focus on increasing sales of existing products or services to current markets or market segments without altering the core offering. There are four: pricing strategy, promotion awareness, product service strategy, or market segmentation. So pricing strategy would be to reduce initial cost if we use the cost plus pricing and improve operational economics, making pricing strategies more viable. Promotion awareness for the EV would be to promote availability, reliability and strategic placement of their charging points, and trying to giving public willingness to contribute through awareness campaigns. And then there's product strategy, which sometimes for giving features, like example is providing multi-port stations or compatibility with evolving standard connector standards. As we know, there are many types of connectors now, depending on the manufacturer or country it is based. And then market segmentation, which we will separate into geographic segmentation and demographic segmentation. And then there's also the role of technology in the EV charging business. So IoT, Internet of Things, would be really something essential here for the metering system, usually in the EV charging business. So this example here is how we would synergize between smart meters, networks, and cloud platform to have a real-time monitoring of energy and grid load, using the Internet of Things, and then this would also help to for the operational optimization by having predictive maintenance on the hardware or equipments of the charging station itself, and also give data-driven pricing, which is the dynamic pricing based on load or peak hours, which we mentioned before. And enhance this could also enhance user experience. So mobile apps which can help show which charging station has the less queue or no consumers, so they can get into that without having to wait for in the line. Yeah, this would first of all, yeah, give comfortability to users and also reduce this range anxiety, or at least they know where the nearest charging station would be. And then okay, getting into the pricing theory analysis. So we will compare here the cost plus pricing, value-based pricing, and competitive pricing. The strength of cost plus pricing, the most simple one we can say, is that it ensures cost coverage, simple to calculate and useful for setting minimum floor price, usually minimum risk because it is all calculated. Value-based pricing, which captures customer value, like before, giving features to premium features. Here we can see enabling premium feature or for fast services, enhance customer satisfactions, while competitive pricing, responsive to market, encourages price transparency and can attract price-sensitive users because the price would be compared with other rivals in the same industry. Now going into the weakness, the cost plus pricing it would ignore the demand elasticity, probably overpriced, underpriced, because now sometimes not looking into the rivals and not adaptive to external changes. This cost plus pricing would be used to in the EV charging, which would be used to set base price to recover charging station costs, grid fees, and maintenance. And then the weakness of value-based pricing is it's difficult to quantify psychological value. It's qualitative data. So yeah, how to rank those psychological value would be something hard and different on other cases. It requires robust customer research and sometimes can miss actual cost recovery, while it is usually applied in the premium stations for fast charging, secure locations, loyalty perks, whatever that gives premium features to the customers. And then the weakness of competitive pricing is it can lead to price wars, yeah, in the same industry, may erode margins, and it's harder to maintain the differentiation. It's used to competitive aggregators and to adjust with rivals. Now going to the pricing model comparison, which was shown early. For the pay-per-use, it's transparent. The strength is it's transparent, encourages efficient energy use, and it's easy to compare cost. Because yeah, it's all we can all count on the pay-per-use, how much we will pay, how much we use. And the weakness is it would need advanced metering, regulated in some regions, and may not reflect time-based value. This is best used in general public charging, regulated market with energy-based billing. So as long the government has regulations set, this is something not usually questionable. And then there's time-based, which has the strength of increases charger availability, and it's simple for users because it's just a time based and then they count it on it. The weakness is it penalizes slower EVs and inquitable costs. It's usually used in urban areas with limited charger space. So yeah. And then we go to the subscription type of use. pricing model, which has a strength that the revenue for the business is predictable because it has a flat fee. It's heavy for it's attractive for heavy users, and it builds loyalty usually. So the weakness is the risk of overuse for some heavy users, which will use this charging anytime without having to pay another fee. It's hard to price fairly, and flat fees may miss grid costs. This is usually best for fleets, for consumers with fleets, commuters, or loyalty-driven customers. And then there's this hybrid, which combines the pay-per-use and idle time. The strength is it reduces overstaying, so people won't be overcharged. It recovers both energy and opportunity cost. And then the weakness is it's sometimes it's complex, the billing, and may reduce vehicle throughput. This kind of pricing model is usually used in high traffic stations or premium hubs. So the strategy for pricing, based on the four aspects we've seen before, is first of all is the cost structure. So it would be essential to choose the right type of charging facilities, which would directly capex the capital and operational expenditure. Currently, the analysis would be the best is to still install a level 2 type charging point. And why is it? Because first, it would lower the installation cost, the existing grid compatibility, because it wouldn't require high compatibility such as the level 3 charging point. It would give high utilization rate, where people would park for 1 to 8 hours, and then it gives lower soft cost regarding the regulations, permits, and anything else. And then for the customer segments pricing strategy, customer segment and value perception to determine the pricing model. So it would, for the location based, it would be set by the denser places would usually give set higher prices, so such as in offices or premium places like the city town side would have a higher cost per kilowatt per hour than those in rural areas. And then also seeing the behavioral incentives, giving loyalty program or rewarding systems for those who are loyal customers. And then for the competition, the strategy is to make a localized competitive pricing, so giving underprice. This has something to do with the customer segments also before. So giving lower prices in charging districts or places in rural areas, and then try to match rivals, but by adding some values in some places. And then also for the competition is to have a real-time price adjustment by adjusting the price slightly below rivals, but then dynamically changing the price into getting higher when we see a rival charging station is highly occupied, so people have to go to our place. And then there's the pricing strategy due to government regulations. Now that the period is still heavily subsidized by government, so businesses should be utilizing the government subsidies during this period and setting price below the break-even rate, and add non-regulated services to charging stations. Now the tactics for the pricing strategy, the market penetration is first. For the pricing strategy is to implement hybrid pricing models. So the hybrid here is to mix between subscription, which sets lower base price for early users, usually giving them trial or discounted session, but also still offering pay-per-use options. And then promotion awareness. So in conclusion, we can set some key takeaways from each pricing strategy and market penetration strategy. Um, the first of all is by starting for early businesses is by starting to install the level 2 charging points, having lower cost and during this adoption period. And the second one is to implement cost plus pricing, which would instantly give make businesses reach break-even point before expanding to another pricing strategy. And then how the segmentation is that we will need to aim for charging deserts or places with minimum competition, rural areas, and target untouched market, so minimizing the rivals or competition in that place. And there's for the pricing, as previously said, we will adopt a hybrid pricing which would mix between subscription and pay-per-use, so it would offer optimal revenue customer balance. And then smart technology, enabling competitive advantage and increase user experience, so setting dynamic prices against rivals, but also and then giving also better user experience, and then complying to regulatory compliance. This is just due to keep a sustainable operation, to not have problems with their governments. And then strategic partnership, this is also important, so it sets partnership with businesses where, say if we have to target rural areas, then there would be supermarkets or still like fuel post, so we can or malls, so we can accelerate market penetration and reduce the promotion we need as we have this partnership with other businesses. That is all for my review on the EV charging business, pricing strategy and market penetration. Hope this would give more insight for everyone who are interested in the topic. Thank you. See you later.